However, I do think something that can give you some comfort in terms of how your investments get you through these times, especially if you can't turn off the television or stop looking at your phone, is by having an assessment of your risk tolerance and making sure that the investments that you're currently invested in reflect that risk tolerance. An example of risk tolerance is you could be a conservative investor, a moderately conservative investor, a moderate investor, a moderately aggressive investor, an aggressive investor. It's just an assessment of how much risk you can stomach. A common question when determining someone's risk tolerance is if your investment lost 10% over the course of 30 days, how would you respond? And based on that person's answer, it kind of gives you an idea of what their risk tolerance might be. Now, the lower your risk tolerance, the lower your appetite for seeing the big swings in your portfolio. And that's okay as long as you have an understanding of that being your personality and can take that information and knowledge into evaluating how you're currently invested. If you are someone who just cannot stomach when your account loses $50 and then you go into your account and you find out that 90% of your portfolio is in stocks and 10% of it is in bonds, you might be in for a rough period of time when it comes to market volatility and your ability to stomach that risk. And while there is a middle ground where you don't want to be invested in the most conservative things just because you don't like losing money, there is also the other extreme that says, hey, my investments are just not in alignment at all with what makes me comfortable. And if I need to dial it back in terms of their aggression over the next few years to give me an increased level of comfort, then that may be a step that I need to take. So what we're going to do to help in giving you that perspective is we're going to put a risk tolerance questionnaire in the show notes of this episode. So you can just take the quiz for yourself and see what type of investor are you in terms of your comfort level. So those are all the lessons that I have for you today. Some of those lessons may be a little insulting, like when I told you that you don't know how to time the market. I don't know how to do it. You don't know how to do it. So stop thinking that you know exactly when the market has reached its low point and you'll know exactly when it's time to put money back in. That's not the case. Another lesson is just because things are volatile doesn't necessarily mean that we're heading for poor market returns. We may be heading for a lot of calamity and trouble when it comes to general society. But if past is prologue, there are periods where we've been in similar situations as a country, and the performance of the stock market has still been positive or not as negative as you would have thought when you look back at how it performed over a series of years. And then finally, follow basic investment behaviors. Do not buy high and sell low. Continue to put money in the market on a consistent basis. Make sure that you've consolidated old accounts so they're not left out there to starve. And make sure that the investments that you do have are aligned with your level of risk tolerance as an investor. Our goal is to provide as much comfort and knowledge as we can in times like these, especially when people are concerned about their finances. So we may go a little more investment heavy over the next few weeks and even find some special guests who may be able to come in and share some even more in-depth investment knowledge than I'm able to provide.